And today we have seen that the market falling drastically. And what we have seen is uh, you talk about the Sensex, it has fallen down by around 1%. And there are the news or the headlines coming on money control that the market has fallen by around 1,000 points. But what does this mean deep down? When the rate cut had happened in the US, and the next day Indian market had touched the all-time high, at that time we shared with our investors the advanced decline ratio. And one thing was very evident there. While we were seeing at Sensex hitting the all-time high, but only 500 stocks were in green and 1,500 stocks were in red. So what does that mean? There was a broad-based selling. So now today, if we are seeing Sensex falling by around 1.5%. But what does this mean for the other categories of the stock? So if you see today, as we are on 30th of September 2024, and we are currently at say around 1 p.m., we have seen the mid caps by down only 0.17. So it is 1/10 of the fall in the Nifty 50 for that matter. And here I will be sharing with you a certain live demo of the market. Not demo, but live implementation of how the things are going in the market and how we interpret into it. So therefore, first the matter of fact is when we say that the market is falling, we have to see that which indices are falling, which sectors are falling. Is it broad based? Is it a systemic risk or whatnot? The matter of fact is, amongst all the news that is going around into the market, we have to remain invested into the market. The question is which sectors to remain invested into, which markets to remain invested into, and what tenure to remain invested into. So here I will be sharing with you the screen and practically showing you how we look at it. So we here is the screen. So I have three monitors here. I will be sharing with you the first one to show you the screen. So if you see here, here we are looking at, say for example, you see L&T Mindtree. So if you see this here as a graph, if you see here, L&T Mindtree had been down, say, for the last 4 or 5 trading sessions. But on the other hand, if you say JSW Steel, if you see that it is on the all-time high in the recent past. So if you see here, so where is the market fall impacting them? So where's the market fall impacting them? It's not. So here if you see NTPC, Tata Steel, they are going up. Tata Steel, now the matter of fact is, are you invested into this stock or not? So therefore, the premise question is whether you are able to identify those stocks or not. Okay, so that is the premise. Now first, let us first analyze how the Nifty 50 are doing and how, what do you say, that mid caps are doing. And then we will see how to identify the stocks and how to see where we need to put our money into. So here, if you see, here we have done the market watch, and here if you see, these are more or less the large caps that we have mentioned or the broader companies. If you see here, the green part of here. So there are very few companies over here, and the majority of the companies are into the red. So if I see that the Nestle India has fallen a lot, Tata Motors has fallen, HDFC has fallen, IndusInd Bank, Kotak, Maruti, STS, so all these bigger caps have fallen a chunk. That is the reason why you are seeing Sensex getting corrected a lot. So if you're seeing Sensex getting corrected a lot, this is the main reason of its fall. Now, on the other hand, if you see, so we can just count it on fingers, the number of the companies which are into the green. Now, let me bring on to the next screen, which will show you uh, the mid cap part of it. Okay. Okay. Now, if you see here, this is the second screen. So these are the mid caps, top 120 companies of the mid caps. So here, if you see, this is all green, and there are only very few of them which have been into the red. So here, on this side, if you see, there have been stocks that have gone as high as 2.5 to 3% for that matter. Even crossing even 4% for that matter. So the matter of fact is there are more mid-cap companies which are in green than proportionately the large cap companies within their own space of large caps. So this is one of the key elements as we see. So therefore, one element is there. When we are seeing Sensex going down, we are seeing large caps going down, not mid caps. So we have to see whether that is a broad-based selling or not. There might be many news that are coming into the market, whether that is of Middle East or you can say the Indian economy, so on and so forth. The matter of fact is when we are looking at it at a longer term, and then we are seeing how to proceed with the portfolio, then the whole ball game changes, because then you are not taking the decisions of what is happening globally, but rather on stock specific or sector specific things. Now, let me bring you back onto the screen on the way how we identify the stocks and how we take positions into it, and how the investors can have an idea of how to look for stock specific identifications. So here, if we see on this part, we have got our own algorithm running based on certain parameters that we have put. So here, if I say NMDC Steel Limited, if you see here, it has already given us, our algorithm has already given here a buy signal. We have already been given a buy signal, and it's already given a buy signal. So when we look here, and when we look here from the Fibonacci level, it has already crossed 38.20. It has touched today at around 50 points. If we are risk takers, we can still enter here, because if you see here, it has touched the 50-day moving average, then reverted back and literally touched that 200-day moving average. So what does this mean? This means it is trying to revert back to the 50-day or above. It's trying to trade above 50-day moving average. If all goes well, we might see it happening 2 or 3 days, or it might just touch and come back. So if there is an investor who is very risk taker and want to have an adrenaline rush and make more money out of it, squeeze more money out of it, he might still consider getting onto it, although the Fibonacci levels have not been breached for that matter. So this is one element of it. The second element, if you say SJVN, now this has just given a parabolic SAR buying signal based on our algorithm. And still, if you see, it is a 50-day moving average. It's already trading about 200-day moving average. So we can say that this stock is already about 200-day moving average. And by 50-day, while over the, if you see the recent past, it has been falling down, but now it is trying to recoup back and trying to go above this resistance level of 50-day moving average. If we zoom past, then we can see its next level being, just a second, here we can, oh sorry, here, this. Yeah, if you see this, it is a 61 Fibonacci level, and it is trying to go past this. It's going to go past it. If it goes this, then the next level will be 140. So it should be touching 140 if it surpasses this in the near future as JVN. So if we see GSPL now our algorithm gets refreshed every couple of seconds. So we get the real-time data on the stocks, which provide us an opportunity to enter. Now we have the GSPL. Now if you see here again, so what I'm saying, I'm showing you here live, while the market is being corrected, you still should be able, are you able to figure out those opportunities that are coming into the market to get into? Again, it has come here, it is around 38 to 50 degree, 50 Fibonacci levels. About 30, it tested and came back. So if we can see how the markets or the sector itself will perform tomorrow, so it might either beat the market and still go up, or it might just touch and go down. So then obviously the point is, you take 10 trades, there will always be a hit ratio. So even if we say the 50 are okay and 50 are not okay, but still you are trying to raise the odds in your favor by making a calculative move. None of this is a guarantee, but if you know technical analysis and you know how to price point your point of entry, you fear a better chance, provided you take risk management measures like money management, risk management, position sizing, asset allocation, all that into consideration while investing. And it is not betting. You should not play like it's betting and you are trying to put all your money into the one stock and you think that it will be it will go gung ho. It won't happen that way. It won't happen that way. So now if you see here SRF again, so these are all the ones we had also taken positions today. Now here if you see SRF, it has already breached the 50-day moving average. So what does this mean? This means that the stock over the recent past had been trading below its 50-day moving average. So now today it has breached 50-day moving average and is trying to surpass above this, test a 61 level, and then it's trying to again it's touched the 50 Fibonacci levels, and then it retraced back, but still is much above the 50-day moving average. So we already have the parabolic SAR as a buying signal, we have MACD as a buying signals, we have already trending up Williams percent and Fisher transform, and every other stochastics RSI is also showing, and you can say selling signal. So you say, what is selling signal? It's an overbought situation. It's saying that it has gone too up, so there is a tendency of fall. But if you see here, while the stock goes up, you can see here the trends can still be maintained. it can still be maintained over here. So that is the matter of fact. The crossover, while it has happened, we have to see how it transforms in a day or two. The matter of fact is once the positions have been taken, that is the reason why the another question comes, whether we should take a stop loss or not. Many of the investors are of the idea that we should just keep buying on it and we should not put a stop loss. And if the stock has come down, then we will wait for it to recover. Now, the irony is that nobody knows what time a stock will take for it to recover. That is an irony of the fact, because if I've invested into a stock, so let me put it this way: if we have two stocks, one stock has given me plus 5% returns, another is giving me minus 5% returns, at least I know this 5% is going up and I can still retain it if I can still see the trend going up. But if we see the other way around, let me show you here. So if I show you a selling signal here, predominantly selling, like we have Bajaj holding. Now let's see here. Now I would be very happy that I am having a Bajaj holding in my Bajaj holding in my account, and I'm just saying that Bajaj holding now going down. Would it be prudent on my part to just hold it, even if my portfolio is minus 3% on Bajaj holding? So I would rather cut the cost, because I don't know how much time I would have with me to remain here. Because if you see here, these two price points. So this is July, and this is August. Now, can I wait for 1 month here for a price to just come up to my level, and then I will think whether I want to hold or go out of it? Now, for a long-term buyers, it would be a different proposition altogether. But when the market is so volatile, when you don't know whether the market will sustain it or not, what to do? So, say for example, if you have invested here, so it is on 1st of March 2024, and the same price level has been there on 14th of August. So you have March, April, May, June, July, August. So for the 5 months, you are at the same price point, and you think that I will not take. Now, on the hindsight, you can think that, okay, this is going up, I can still retain it. But there might be the fair chance where it has not gone up, it might go down. So if that would have been the case, why not I get into, say, for example, Jindal Steel? So even if I have to hold a stock for such a long period of, say, 6 months, I will rather try to hold a Jindal Steel and that make more double the money than it. The matter of fact is nobody knows where the stocks will land up. Neither I nor our finance minister. So the matter of fact is whatever is there in our hand, that has to be secured. And whatsoever has been trading below its stop loss, that has to be cut, because it is very difficult to recover the money back than to make the money. It is easier to make the money, but it is very hard to recover the money that has already been lost to the market. And believe you me, when we are into the markets, we are competing against machines, automations. We are actually investing against big financial institutions which are doing high frequency trading, and you need to be smart enough in your head to at least get your chunk of money out of it. That is how it goes. So now we have this, and let me put it this. I will just put it buying. Okay. So now here, if we see, we can go it buying. Okay, we go it this. We go it all. Okay, we go it all. Okay, so here if we say Maharashtra Bank has also given two signals, but still it is much weaker here. If we can see, I as a fund manager, I will not take a bet on it, because there is not much a probability for me to get into such stocks. So the like IRCTC is also one which we got into one, because it is now getting above the 200-day moving average and approaching the 50-day moving average. So therefore, if you ask me, we had been very much bullish today on the IRCTC, on the clean energy for that matter. If you see over the past couple of days, it has just breached its resistance triangle, and now had gone up. So if everything goes well, we can still see some money out of it. Now, even if we don't make, we are still nearly up 90 pence, are nearly 1% up on the clean. On the SRF also 0.5% up, 6.5% on Whirlpool. We had also been taken positions into the Whirlpool a day or two back. So the matter of fact, what I am illustrating here is, when you are entering into, on what premise are you entering into? With what knowledge at the back of your head you are entering into the stock market? You are just saying, okay, what is an advanced decline ratio? The stock has fallen by 15%, and I know I need to go and buy the stock. Is this the way we are trying to make a judgment while entering into the stock? So if we are doing that, then I think there's a fair chance of 80% of we losing the trade. So matter of fact is, in the current scenario, while we have an overall equity portfolio, we have seen broad-based selling happening in the recent past. Many like HPCL, many of the petro companies have also seen recent corrections happening for fortnight, for a month, 2-3 months period. There are many stocks which are 20% down. So therefore, matter of fact is ki if tomorrow the West Asia things explodes and we are waiting for the stock to go up, it's the very least chance that we'll be able to make money. So matter of fact is, so whatever the money you're putting into the equity, you could split it into the two parts, the strategic and the tactical. The strategic could be, say, buying for a long. If you're going to buy a stock for a long, you cannot buy a stock which is pricey. You cannot buy a stock at a 110 price to earning ratio or 150 price to earning ratio and think that you will make money over the next 5 to 8 year period. You will not be able to make money in the double digit returns. Matter of fact is because you are buying at a very high. So therefore, if you're trying to go for a long position, that means buy and hold strategy, then your price to earning ratio has to be in 20s or at least 30s, or even if less than or around the average category average. It can't be among the top outliers, and then you think that for the 5 years you will hold on and still make money. We have seen that what had happened to Maruti between 2017 and 2023 when the price was nearly at the same level. It was, in spite of COVID being over by 3 years, the stock price never touched unless and until it was September 2023. So matter of fact is, going long, you need to buy stocks cheap. If you're not getting stocks cheaper at this point in time, so therefore the next thing that you need to be doing is to buy, make money, sell, come back, and do it on and on if you are an equity guy. Thank you so much. This is Rajat signing off, and have a great day.